Hey guys, Jason here, taking a look at Netflix. Starting to look more interesting. I like what I see. I'm still not convinced about the bull break, but I think it's coming. And we got a couple of things that are really kind of interesting today. We had this zone of resistance at 297.17, and this is the high a day from September 10th. And then on Friday's low a day, September 13th, 290.04. Both of those ranges came into play today. On the 5-minute time frame, we saw a break and we saw a rejection. And it's interesting that both of those happened, and we ended up at almost a perfect doji. So that tells me that there is a complete imbalance, which is good for the bulls because it means that this downtrend that has been dominated by the bears, at least today, has reached this hinge point of complete balance. And that is when bulls have the opportunity to start changing what we're seeing. So on the daily time frame, like I said, complete balance. We have a zone of support, 297.17, 290.04, and I'm going to be watching both of these ranges for conclusive action tomorrow on either a support resistance test or a break and back test. Either one of those, it's going to give us a lot of information, so we need to be paying attention to that. If we go to the hourly time frame here, you can see how this comes into play. Here's this hourly uptrend, big spike, rejection, pushed to the downside early this morning, and looks like a lot of chop. Actually, let's go to the 5 minutes, see what exactly happened. Out of the gate, rejection from this zone of resistance, so we can go and mark that out and draw that in as we do. So 297.43, and then likewise way down here, there's that rejection from that break, and it's a bear attempt. And in both these cases, it's pretty extreme. We got overbought and almost oversold within a couple hours of each other, and then we just sort of meandered the day out and closed it up. So when this happens, I'm just going to look to my daily time frame and I'm going to say, who's going to break first? Are we going to break out of the zone of resistance? Are we going to break out of the zone of support? I want to see what happens tomorrow morning, and for me, it's going to be all about these key levels. I would love to see the bulls pull it off and make a nice move to the upside. And should they do that, we do have resistance to watch out for here at 301.55. And then after that, we don't really have anything on the daily to 311.75. So setting up for a pretty nice potential move for the bulls. Should we get rejected again, we do have this nice support level to fall back on. And we've established a nice base of support here on the way up on the 4-hour time frame. So quite a few levels to watch out for. I would look for support at 286.60. 282.66 and then 282.50. This is pretty much the line in the sand for the bulls. If we break that and go bear, we're going to resume that daily downtrend. That's it for today. Netflix could be a pretty good show tomorrow. Good luck to you, and make sure you manage your stop loss as well. That's how we stay in this game. Hey guys, Jason here for TheChartGuys, taking a look at Tesla. It's been a few days since we looked at that video. Nice red candlesticks. I would love this to have been a bull flag. Today's action was a little bit more substantial than I'd like to see. We still have the potential for us to hold this bull flag situation, but we need to see a pretty good day for tomorrow for the bulls, and we would need to see it stay inside a pretty tight range of action here. Pretty much can't go any lower than it has, or I would consider that to be negated. I'm on the fence about considering it to be negated. Right now, I want to see what bulls do first thing in the morning. If they open lower, I'm going to call that not a bull pattern. Or not a bull flag, maybe at equilibrium, but that has a lot of work to do to be the latter. So on the daily time frame, we do have low day support for us, working in our favor, 241.17, and that's only since bulls were able to pull back. Low volume day, comparatively. That's not a bad thing when we're looking for this consolidation. We need to see our bull volume outweigh our bear volume, as we have seen over here, and has resulted in a pretty substantial move after we broke out of that zone of resistance. Daily high day support resistance is going to be 247.43, and then beyond that, we're looking for 253.50. So I'll mark that one out. And we're going to see what bulls can do tomorrow. If we break 241.17, that's going to be a negation of that bull flag. As I said, we will look to see if we can carve out some sort of base of support here, but we've moved up so quickly, so fast, we're going to rely on our RSI levels. RSI in the daily is happy at 60. Let's go look at the hourly time frame, try and figure out what has happened here. We are looking at an hourly downtrend with a loss of 244.61. We've dropped and established that new support, as we've talked about, 241.17. Hourly RSI happy at 43.31. So this is where this consolidation comes. I would have liked to have seen a little bit less of a drop to fit inside that bull flag narrative. But if we are able to recover and establish a new hourly trend and eventually break above 248.24, that will have things looking a little bit better for upside continuation. So let's set up some levels for tomorrow. 241.17 is going to be hourly support. Below that, we do have support at 235.54. If we break above 248.24, 253.50 is the target. Hey guys, Jason here for TheChartGuys, taking a look at Amazon, and I'm doing things a little bit backwards today. I want to talk about the 5-minute time frame first. So we had established a big drop out of the gate. We had a 5-minute oversold bounce, and we ended up bouncing and getting rejected from our EMA 26 for quite a while. We drew in this nice 5-minute trend line that we talked about inside the TheChartGuys community, and we found this break, and it was on like not great volume, but it was, you know, decent volume. And if we go to the 2-minute time frame, you can see that in action. There's that break, minor back test, and continuation. Established support at 1802.01, and then later on we get a nice double bottom. But what happens when we break out of this pattern? Got this drop, we see a trend change, and we want to see bulls pick up the steam. But bulls do not pick up the steam. They just simply go sideways. So that says to me there's something bigger here playing out. If we zoom out to the 15-minute time frame, it starts to look, well, like we've got some sort of flag situation. But it doesn't look like a flag on the 15-minute time frame, so we go to the hourly. Here we start to see something that resembles a little bit more of a flag. So let's clear our charts. Here's that drop, and a flag looks like that, and you get that nice contained action, and then you expect more downside to come. So are we in a massive bull break after getting out of that trend, after seeing hours and hours of downside movement? No, but we are consolidating nicely on the hourly time frame to get out of those oversold conditions and prepare to reject possibly from this EMA 12 on the hourly time frame. Should we do that, we will look for support at 17.95, and then we've got some more support over here at 17.95, 17.85, and then ultimately 17.54. Now, if I'm way off base on this and bulls manage to show up tomorrow, what is the target? Well, we're going to go to the 4-hour time frame. We're going to zoom out and look at this and say, well, we got a lot of work to do. We're in a 4-hour equilibrium, because at that point we will have pulled up from that 17.95, and then we would look for something under 18.53 as a potential lower high. On the hourly time frame, what that is going to look like is for us to come back down, establish a higher low over 1820, and then a new higher high over our current high, 1808.77. So a lot of that is speculation, and it's just preparing for potential scenarios. Right now, the data at hand says we are in a hourly bear flag, and to watch out for a break of 1800, because that will have almost in full execution of that bear flag with support at 1795 and 1754. That's it for today. I hope this works out and is a good teaching tool. We will keep an eye on it tomorrow and see what develops. So let's spitball for a little bit all about Apple, because our daily chart is really sort of all over the place. And when that happens, we got to zoom out for clarity, or sometimes you got to zoom in for clarity. But I'm going backwards on this one. And when I'm looking at Apple here, I'm seeing an awesome new high and a big drop and a lot of work to get back to where we were on this monthly candlestick. And for me, that really says, well, one of two things. A, the bulls are completely turning things around, and we're going to break 233.47, and we're going to keep on marching. If we do that, our RSI on the monthly time frame is going to be quite high. We're at 61.74, and that means that we spent so much work getting out to this point that we're not going to have a lot of oomph left, no gas in the tank to just continue marching on as we have been. So this big drop and this bounce suggests to me that there's going to be some sort of equilibrium or a longer term play inside this area. So if that is indeed the case, I would like to see that lower high, and then I would like to see this tightening range. That's just the ideal scenario. Rarely ever works out that way, but we got to speculate and plan for potential setups. So on the weekly time frame, what this says to me is we've got this tightening range, 142, 215, 170, 221, 192. This is a tightening range, and it almost fits in. If I'm not even going to draw it with trend lines, because I just want to talk about it as a base theory, which is that you have some sort of ascending wedge type pattern, some tightening range here that says, yes, this is moving upwards, but this is a bearish pattern, and that would fit into that overall bear hypothesis on the monthly time frame. So with that in mind, we go to the daily and we try to determine what's happening, because we're right in the middle of this big choppy mess. Inside this pattern, you either have support, resistance levels, and then you've got some decisions that need to be made when you're fighting your battles right in the middle of the pack. So I go to my daily time frame, try to see what's going on. Here's our resistance zone. Just happened to match up on our trend line here, and we bounce back and forth. We get up to the mid-range, bears retake control, we bounce off that level again, we get back up to trendline resistance, we bounce around. Now we're in the middle again, and it's hard to pinpoint what sort of action you can expect to see when you're right in the middle of a pattern with no real commitment in either direction. And we keep getting these candlesticks right in the middle of the pack that have a lot of intraday action, and there's a lot of opportunity on there, but we don't see that time frame continuity backing us up in the way that we would like to see on a more substantiated, awesome trend. So on the daily time frame, we keep getting these wild, choppy days. We get good opportunities and rejections, and right now we're in the middle of the pack. So we need to see what is going to happen, and our big plays and our most successful plays are going to be in the areas of our support and resistance, assuming, of course, that they continue to act as such. So right now, middle of the pack, daily time frame. What does that mean for us? Well, we can play the hourly time frame. We can use the 4-hour time frame to try to determine what sort of direction we might go in. But ultimately, our money-making opportunities are going to be in these two areas. So let's just go to the daily. Actually, we're on the daily. We see a big spike to our resistance area. We see a drop down. We see a nice an inside bar. And what I would say is more likely than not, and this because I want to see this pattern play out, ultimately it's going to be coming down to a break in direction of this inside bar. I'd like to see us come back down and set another level toward that trend line support. Again, inside bar. So this is when we clear our charts and we talk about the actual action that we're seeing. Confusing, right? It has to be, because there's a lot of information here. So we know that we are at resistance. We want to find our support. We got an inside bar setup. Nice, strong day today, but it was not enough to get over those levels. So if we're going to continue the upside tomorrow, we want to see a substantial break of 220.79, and we're going to look for support at 217.02. Should we get a break on our bull? Should we get a break for the bulls? You can tell I've been doing a few videos now. Hey, I'm running out of words. 226.42 daily resistance, high day resistance from the 12th, and that's right around that trend line, so we need to be cautious of that. And if we break bear, we don't have any support on the daily until we have our big drop down here at 211.74. So big range setting up, and we want to see a nice break, a nice clean break during regular trading action as we head to one of those levels. I'm going to skip the 4-hour and I go right to the hourly time frame. Here we are, 216.30. Let's go down. Actually, how did we arrive at this level? Here's our range. Let's go to our 5-minute time frame, see how we got this level set up. All right, so on the 13th, we had that range. We broke it pre-market and we've been edging up. You know, I'm still going to play these levels because pre-market, look at the volume. It doesn't have the same commitment to me. I'm concerned about what bulls and bears are able to do during regular trading action. This looks like an ascending wedge. So this is higher highs and higher lows with that tightening range. Again, that would be a bear break. I would love to see us come up, test that 220.79, look for rejection from that level, and then play the bear break down and see if we can't even get a tighter range tomorrow. Ultimately, I spent a lot of time talking, and we have arrived at the same sort of conclusion. We've got an inside bar. We're seeing that equilibrium, that balance on both the overall weekly time frame inside this pattern, and now in the 5-minute time frame inside this day. It all comes down to finding these hinge points, this 220.79, 217.02, picking a direction, and looking on that chart to see where inside this overall pattern we're fitting. We're at the tipping point, and we can really go either way. We need to find either the bulls or the bears to push that snowball over the edge and start taking us back down or back up to those trendline resistances and play the action there. So I hope that was helpful. I think it was more of a grand hypothesis with very little daily information. It's just an inside bar with an ascending triangle or almost an ascending wedge here. So watch for that break. A lot of resistance at 220.13. That's going to be key for us tomorrow. And we may have broken it over after hours, but I want to see what happens during regular trading action. Where do we open? And what signals can we see first thing? Anyway, that's it for Apple. Have a good day.